Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2025, and we're diving into Uber's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Uber's latest financial performance, which has shown significant growth and profitability this quarter.
Revenue and profitability overview. Let's start with the top line. Uber reported a revenue of $13.5 billion for Q3 2025, marking a 20% year-over-year increase. John, what are the key drivers behind this growth?
Uber's revenue growth is primarily driven by a 21% increase in gross bookings, reaching $49.7 billion. This growth is supported by a 22% rise in trips and a 17% increase in monthly active platform consumers. Additionally, the adjusted EBITDA saw a 33% increase to $2.3 billion, indicating strong operational efficiency.
And what about profitability?
Uber's net income surged to $6.6 billion, largely due to a $4.9 billion benefit from a tax valuation release. This significant boost in net income highlights Uber's effective financial management and strategic tax planning.
Operational efficiencies and future outlook. Uber's operational cash flow and free cash flow both stand at $2.3 billion and $2.2 billion respectively. How does this reflect on their operational efficiencies?
These figures indicate Uber's robust cash generation capabilities, which are crucial for funding future growth initiatives. The company is well positioned to invest in new opportunities while maintaining a strong cash reserve.
Looking ahead, what does Uber's guidance for Q4 2025 suggest?
Uber anticipates gross bookings between $52.25 billion and $53.75 billion, with adjusted EBITDA expected to grow by 31% to 36% year-over-year. This strong guidance reflects Uber's confidence in sustaining its growth trajectory.
Segment performance and strategic initiatives. John, can you break down the performance across Uber's segments?
Sure. The mobility segment generated $7.7 billion in revenue, a 20% increase, while the delivery segment saw a 29% rise to $4.5 billion. The freight segment remained flat at $1.3 billion. Uber's strategic focus on AI and autonomy is expected to further enhance these segments' performance.
How are these strategic initiatives expected to impact Uber's future?
Investments in AI and autonomy are pivotal for Uber's long-term growth. These technologies can improve operational efficiencies, reduce costs, and enhance customer experiences, ultimately driving higher profitability.
EPS forecast and market reaction. Analysts had forecasted an EPS of 67, but Uber reported an actual EPS of $3.11. What does this significant beat mean for the market?
This substantial EPS beat is likely to be well received by the market, reflecting Uber's strong financial performance and strategic execution. Investors can expect a positive reaction, potentially driving the share price higher.
What factors contributed to this EPS outperformance?
The EPS outperformance is largely attributed to the tax valuation release and strong operational results across all segments, showcasing Uber's ability to exceed market expectations.